presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom, how you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
Good afternoon, everybody. Happy Monday, holiday week of trading, and we got markets picking up where we've been most of the year. Green territory in equities and in metals. And you're talking about near records on the indices, but gold record prices, silver as well, platinum making a run for those records all the way back from the early 2000s. We kick it off with the S&Ps. We're up by 43 points right now, up by 0.6%, just off the highs made earlier today. We're trading at 69.30. Now, for some context on the S&Ps, you're only 23 points away from all-time highs on the futures, made October 30th. And yeah, we got quite a run going on right now in these equities. Led by the Russell, as we'll get to. Russell's up 31 points. NASDAQ 100, we're up by 0.5%, 25,688 right now, up 114 points. The Dow up by 0.5% as well, 245 points in the green, 48,710. And the Russell up by 1.2% at 2576. Bitcoin, some selling throughout the day. We just hit 88,000. We're trading at 88,180. Flat on the session from Friday, but we got selling today. We came into this in positive territory for Bitcoin. Crude, we get some higher prices. We're finding a bid in crude. Crude right now up $1.52, up 2.7%, 58.04. We were just trading a 54 handle last week. Crude 58.04. We jumped to yields with the 10-year, a little bit of lower price, higher yield. 10-year 4.16%. The dollar gives back some of those gains from last week. We're pushing 98.31 right now. There's your short-term time frame on the dollar. We trade lower from the overnight session. Got a little dollar weakness off about 29 pennies. And dollar weakness helping the gold market. You come into the opening bell at about 44.60, right? So not, most of this was overnight. You had the dollar weaken and you had gold accelerate higher. But as I said this morning, so check it out. You go over to the dollar. Okay, and here's the week of the dollar last week. As in the dollar weakened overnight, but all we are is back to where we were Thursday, Wednesday, and the end of the day, Tuesday. Okay? Thursday, gold only spiked to as high as 44.50. Wednesday, we were at 43.80. And Tuesday, the spike was 43.60. So right now, you got gold trading more than $100 higher at the same time that your dollar index was actually weaker on Tuesday. And what is that pointing to? That's pointing to strong metals, okay? When you get the dollar strengthen, you're not pulling back in gold as much as when the dollar weakens, gold is going up. Now, even more exacerbated with silver. Silver's up $1.25. That's an all-time high of 69.52 this morning. Now, check out the volume on silver. Watch this. Now, we had massive volume on October 13th, okay? We haven't broken that on a weekly with volume, but check out the last 3 weeks in silver. 547, 613, and 556. Three of the strongest weeks out there on the chart. Okay, you compare that to gold. Check out those last 3 weeks. Not exactly the same strength. They're talking about it in the den. They're talking about it everywhere, right? The run silver's having now. Check out platinum. How's that for some buying last week? Right? So the leader's platinum right now, second in the running silver. Gold is still strong, okay? We're not selling our equities right now, but as I keep saying, I'm going to tighten those stops, all right? Because we are going to get some volatility in these metals. We're going to get a new Fed chair coming down the line, probably in the next couple weeks, realistically, within the first couple weeks of January, from what the president says, the speculation. Pressure is going to be on rates to be lower. That's going to keep pressure on a weak dollar. And that should be a wind at the back of gold, silver, and metals. But guess what? Nobody quite knows what that rate path is going to look like. Chairman Powell has 3 meetings left. And then the new chair will get 5 meetings throughout next year. But as we've seen over the past 1, 2, 3, 4 years into COVID, very difficult for this market as we swing violently, even on the 10-year, to figure out where rates are going. We've been violently wrong on many occasions. Okay, you go back to September of last year. First market saying, oh, the Fed's going to dramatically cut, right? Higher price, lower yield. I think we hit 3.6 or 3.7. And then we got it massively wrong the other way. We got lower price, higher yield, right? Inflation, no, that didn't happen either. Then we were back and forth. So we're going to get some of that volatility. So it's been a heck of a run. Okay, I was talking to a friend today, and we were just talking about, man, you know, you pull up the GLD. Folks, GLD just traded from $180 to $408 in 2 years. And where was your max pain? You had a little bit of a pullback on the tariffs. Didn't seem like much compared to what was going on with the equities back then, though. So really, that didn't seem like much, right? If you were in gold or the GLD, it felt like a safety play because you were actually going up when the whole rest of the market was going down, right? And then you got this pullback here. That's it for 2 straight years. So I imagine that we're going to get a pullback at some point. We'll see if it happens, but there's no shame in picking a stop. I'm not selling, but I have stops in the sand. And, you know, pick a stop, write it down, do whatever you got to do so that if the market hits it, you get out. Because another way to look at that is that we're going to get pullbacks. And if you put a stop in place, you're going to have more equity and more cash, liquidity to get back in on the next trade. We're going to have trading opportunities in this market. And I think it's going to be a great market. But I think we'll have a little bit more chop next year than we had this year. The only thing we had this year was a consolidation and a 2-week pullback. That's it. I mean, folks, it's the end of the year. Outside of this consolidation you had, which realistically is not that big of a consolidation when it's only a $250 consolidation on gold, and meanwhile you just traded from $2,600 to $4,400 this year. Outside of that, what do we got? 1 red week, 2 red weeks, 3, 4. Those are red, but they don't count practically because you almost went up, right? So 3 or 4 weeks, maybe 5 or 6 weeks of negative. Folks, it's the end of the year. All we had was a consolidation. So I'm looking forward to a little bit more volatility next year that's going to provide some opportunity. But the other side of that is, just like gold is getting stronger than the dollar right now, as in, you know, gold's at 44.73 right now, as I just mentioned, well above where it was last week. Meanwhile, the dollar was actually last Tuesday was trading at 97 handle. I think gold's just leading some of the dollar weakness that we may get. But guess what? You're going to know real quick whether you're right or wrong because you are right at that channel line, man. And you're hugging 100. And you start breaking away from there. 90 is the next area, but this is your critical point as you're bumping up against that consolidation. But boy, metals. But not getting out yet. Not getting out yet, that's for sure. There's nothing to say that this rally is not plowing on. Gold, volume getting a little weak, but guess what? It's holiday trading, folks. It's going to be a very light volume week. This week, same deal next week. We got New Year's Eve and then New Year's on a Thursday. This week, we got a half day on Wednesday, closed for Thursday, okay? But Friday, that's going to be one of the lightest volume days of the year. All right, folks, we're coming right back with our man Steve Rhodes. Talk some markets. Don't go away.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We got S&Ps up by 43 points right now. And right now, folks, as we do each and every Monday at 3:15 p.m. Eastern Time, we're going to jump over to our man, Steve Rhodes. Folks, you can check out Steve's outstanding newsletter, Mastering Probability, right under the newsletter tab at TFNN.com. Remember, every newsletter we have, folks, you get a 30-day money-back guarantee. You can always check out those Tiger Dollars to add savings to Steve's outstanding newsletter. You get all the archive webinars he's done in there as well. You get some time over the holidays. You want to sign up for the letter. You gain access to all the archive webinars. You still get that 30-day money-back guarantee. Check it out. Steve Rhodes, good afternoon.
Hey, Tommy, how are you? Merry Christmas to you.
Merry Christmas, man. We're here. We got these 2 weeks. Kind of cool, man. Falls on a Thursday, right? Feels like we almost get 3-4 day weekends, man. Who's working the Friday after? I don't think TFNN is going to be open, man. That day is a very vacation day. Happy holidays to you and your family as well, Steve. How's it going, man?
Thank you. Well, we got Chamber of Commerce weather that's going to be down here. I'm looking at my phone right now. It's going to be in the mid-70s. That's the way I like to celebrate Christmas.
If only Florida weather was like it was all December, all year round, right? Because, man, we got some beautiful weather right now. I agree. Especially the mornings, folks, the nights, right? That cool, crisp air, Steve, just beautiful, man. Enjoying it. Great holidays for sure. So how about this market? We're going we're going higher, as that's been the trend this year, Steve. The Santa rally, it's coming, it looks like, right now at least. What do you think?
No, I think you're dead on, and we can use some indicators. So, instead of us trying to have some kind of assumptions, we've got some data that we can use. We've got historical information that provides us with a competitive advantage. And I think a competitive advantage is a good thing to have, especially when you're trading these markets. And one of those competitive advantage tools, Tommy, is the spot VIX index. A lot of people talk about it as a fear gauge or what have you. I have no idea how you would possibly trade that. We don't have to worry about that. I've got technical patterns out here that show us exactly how to trade it. So those folks that are longtime listeners of the Trader's Edge show, they knew on Friday when the spot VIX index closed below minus 10%, that we had a one-day rate of change below that level, and those are the green arrows that are on this screen here. More times than not, when that occurs, we get an initiation to higher price. In fact, when you take a look at all those green arrows on this chart, folks should be taking snapshots of this screen, whether on YouTube TV or inside our Tiger's Den, so they can go back and they can take a look, so they can put this chart together for themselves. We typically go to new highs. So what you just said is spot on, and we can use the spot VIX index as one of those tools that have given us that signal. Now there's more, but there's more information that we can gather from the spot VIX index. For example, I talked about trading sessions that have a one-day rate of change below minus 10%. We also use those one-day rate of changes above plus 10%, and those are the blue arrows that are on there. Those are usually the hard down days inside the market. But it turns out when we get rates of change above plus 10%, we typically get a bounce or a bottom during the next trading session. So especially for intraday traders out there, that's really important because a lot of times you can catch quite a nice move overnight in the early morning hours out there. So that's another way to use the spot VIX index. There's a third way, which is we can take a look at the spot VIX index versus its futures contracts, its forward future contracts. We can go out 12 months for that. There's another way of doing that, which is taking a look at, I can take a look at the 3, the 6 month, and the 1 year. On the bottom of this chart here, I've got a 3-month counterpart of the VIX, and I compare that to the actual spot VIX. And when that did, we're looking at the very bottom panel. You can see the mathematical formulas here. I'm just simply dividing the VIX by the 3-month counterpart. When that goes above 0, when it goes above 1, we are in contango. And when we are in contango, what it does provides us with an excellent opportunity of a bottom that's forming. I've just thrown a few of those yellow arrows out there so that you can see, and this is really great for longer term patterns. Now, you can see if we come forward here, most recently, the most recent bottom that we had was one of those signals out there. So that too suggests that we should rally into the end of the year, that we should move higher out there. And then, of course, we have the following element with regard to the spot VIX, Tommy, and that is how is it trading in regard to its 50-day exponential moving average out there. And that's actually panel number 2 from the bottom. And I'm sorry, panel number 3 from the bottom. And when the spot VIX is below the 50-day exponential moving average, it is buyers that have an edge. And when it's above the 50-day, it is sellers that have an edge out there. So the spot VIX index, a very cool tool. We should never really think about it as a fear gauge because there's no way to trade that. But I've now just given basically 4 technical patterns that everyone out there can use to help interpret the message of the markets for the S&P 500. I think that's pretty cool.
I think it's amazing, man. Folks, for that chart alone, you got to go check out Mastering Probability because so cool. And if you're in the market enough, Steve, you know that just the VIX matters, right? But to see it on that chart, man, and I was thinking of you Friday afternoon. I was doing the show, and I had the VIX up, and just looking at the numbers, it was like 10.6 or something down. And I said, I remember that, man. And sure enough, now it's down again. I was already, it was remarkable that we hit 15 because we were at 18 on Wednesday afternoon, folks. So Friday afternoon, we're at 15, right? And it's like, oh, okay. That's I see what's happening. Now we're at 14, which is pretty remarkable. Yeah.
Yeah, and what's nice is just it's a straight objective tool. Look, it doesn't mean that it's always going to work out the way that we think, but what we're doing here is we're giving ourselves, again, that competitive advantage, which I believe is really a great thing to have. Another one of those competitive advantages that we take a look at are the TAS market profiles. They help assist us with regard to where price is headed to. We use the oscillator and change line. This here happens to be a chart where we can take a look at the daily charts for instruments that represent the S&P 500. So one is the actual S&P 500. The other would be the futures contract. Next to that would be the SPY index ETF, and then we've got the equal weighted ETF. We like to take a look at all 4 of these charts to see if they are giving us the same message. And it turns out, in the case of the S&P 500, when you trade above a green oscillator and change line, that tells us we have a rising price oscillator above 0. Those are bullish conditions. No reason for it not to continue to move higher with its all-time highs or its T9 count being the target. Inside the ES Mini, if we close the day above the top of its profile, shoot, I didn't have it down here. It's right around the 69.25 level. We would be in very bullish conditions. That would suggest continue to move higher. The SPY is telling us that we should go target 686. And the equal weighted ETF, which is really important, it's trading inside a bullish structured daily profile. If we get it close today above 192.95, and I know we're trading above that, we should head up to 194.97. So exactly how you just opened up the show, we've got a bunch of tools here that are also suggesting that we should continue to move higher. I don't want to run out of time here, so what I'm going to do is going to just move forward. Take a look at the seasonal patterns. This is a 97-year seasonal pattern. That suggests we should rally up. The red vertical line is going to be where we're at today. Suggests that we should rally up into the end of the year. This is a 97-year post-election cycle, so there's 25 data points. This suggests that we should rally up into the end of the year. Here's a 10-year cycle, Tommy. If we just simply take every year that ends in a 5, I can go back and get the last 10 decades of that. You can see here we should rally into the end of the year. If I take a look at all bullish years and all those ones with check marks, they are to the left of the year. Each of those were bullish years in the markets. We can see here we should rally up into the end of the year. The last decade, if we just take a look at the last 10 years, that suggests that we really should rally into about the December 27th-ish type time frame. So the end of this week, maybe the beginning of next week, and then we start to pull back there. So everything, like you just said, is really pointing to a further rally. And if you want to talk about, just finish this here with gold. Gold's made new all-time highs today in terms of dollars, euros, yen, Great British pound, and Swiss francs. The gold does have further to go to the upside. Absolutely.
Yeah. How about that gold, right? I mean, globally. Just versus last week, as I was saying, man, the dollar was weaker than it is like a week ago. It hit a 97 handle. So it's not all about the dollar, man. That is remarkable. Steve, great work. You always do such a great education, putting that work into that. I love statistics and probabilities, man. And that was a great wrap up. Listen, have a great Christmas with your family, man. Thanks for everything you do. We look forward to the program tomorrow, Steve.
You bet. Take care.
Thanks. Folks, check it out. Mastering Probability. We're coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps right now, positive by about 0.6% on a volume basis. We had some selling. Okay, that sticks out. The week before Thanksgiving, November 17th, you accelerate lower on 10.8 million shares. Just something to watch. Okay, we'll see how we wrap up. We're into, great seasonal stats. I love statistics, probabilities, and when I look at the charts like that Steve was just posting there, it's so cool, right? You just think about, okay, markets are a representation of all of our fear, greed, emotions, and the way that market seasonally comes into the end of the year. Now, you have tax selling, of course, but people who are tax selling are normally not waiting until the last day of the year, right? The second to last day of the year. They're estate planning, they're tax planning throughout the month of December, potentially, okay? You can have that on the close of January, but what it may be saying is really who's going in there selling the market, needing to sell the market on a longer term basis in the last week, right? When you go into Christmas, you're not really doing anything. There's no reason to sell. If you wanted to sell, you probably sold ahead of time, because what are you doing? You're getting ready for Christmas. You're getting the kids out of school. You're getting ready for a Christmas vacation. Maybe you're going away with the family after the holidays, whatever it is. But great stuff from Steve. Check it out on the front page under the newsletter tab. And don't forget about the TFNN Holiday Tiger Dollar Sale, folks. Runs through today. You get a free TFNN mug, and you can get up to a 40% bonus on your Tiger Dollar purchase. They can be used for any newsletter. You current Mastering Probability subscribers out there, Opening Call, The Gold Report, okay, Larry Live Trading, Fibonacci 24/7, any of that you can use Tiger Dollars for. You apply them once, they're automatically used. Excuse me. There's 3 tiers that you have to choose from. You spend $500, you get 600 Tiger Dollars, 100 bonus, 20% bonus on what you spend. You spend $1,000, you get 300 free Tiger Dollars for 1,300. That's a 30% bonus. You spend 1,500, you get 2,100 Tiger Dollars, a 600 Tiger Dollar bonus for 40%, and you get that free mug. And we only run 1 or 2 of these sales a year, folks. So this is the time. Excuse me. Tiger Dollars are always available, but we double the bonuses, okay? So all year long, you can get a 10, a 15%, or a 20% bonus. But as you can see, even on the $1,500 level, that's usually a 20% bonus, giving you 1,800 Tiger Dollars. But if you're a current subscriber to any newsletter, any service, or you're thinking about signing up next year, check it out and add some savings onto that subscription. And yeah, great stuff from Steve, Basil, Larry. Very fortunate to have all those guys as a part of TFNN. Check out their services. You can check them out all, folks, and you get a 30-day money-back guarantee. I often tell people, you're new to TFNN, you say, who do I start with? In theory, you could start with them all, okay? You get a 30-day money-back guarantee on all the products. You could say, I want to start with all of them, and then I'll figure out which one I want to keep. Maybe you want to keep more than one, okay? And you can do that with Tiger Dollars as well. All right. Gold right now, just backed off in the last 20 minutes or so. But yeah, quite the chart, and I'm glad Steve covered the VIX. We hadn't talked about it, but boy, if that's not telling into this market drifting into higher territory, if the VIX isn't spiking right now, and there's always the potential that we get a news-driven event that comes out of nowhere, okay? It seems more likely this year that we get a news-driven event around the markets that comes out of nowhere for a surprise announcement, but that always exists. But outside of that, it's December 22nd, and the VIX is about to hit a 13 handle, okay? This is the lowest VIX, we have seen forever. No, I kid, not forever, but is it all year? It might be. My goodness, is that what we're doing? We didn't see it all year? Wow. How about it? All year, lowest VIX. Let's see, we got to go back. How far we got to go back? Yeah, we got one at the end of last year as well before you got some real volatility in December. Well, higher we go. And look at that pronounced move. Jump over the dollar right now. Oh, yeah. It's continuing. Look at this. 98.27. I mean, when I was getting ready to come on the show, we were at 98.33 leading up to it. Silver, 68.76. Speaking of gold, well, this one was interesting over the weekend. So this is about Paulson, okay? John Paulson, and this is about critical minerals, of course, okay? And I'll post this one in the Tiger's Den. This is a good read. So let's see, which mine is this? He owns 20% of it. The owner is Perpetua Resources, okay? It's an abandoned mine. And what is at stake here, most importantly, okay, I'm trying to get the exact mineral that they're going for in here. Oh, come on. Yeah, this is a big read. There it is. Antimony. Okay. Yeah. Thank you, Double Broad. And so this is how they make it. Appears in ore as mirror bright blades. Okay. And this is the mineral that they want. But part of me, after reading this article, okay, says that, boy, this is going to be quite a gold strike it rich story for Paulson for the gold perspective. This mine supplied 90% of the antimony to the Allies used in World War II. Production was halted around the end of the Korean War. Now, mining capabilities and discoveries since then have come a long way. Gold was sporadically produced in it in the 90s. Okay, now Paulson owns 26% of this. Perpetua got its first Department of Defense grants in 2022. Okay, so imagine they're getting defense grants for him to mine gold. Okay, here's where it goes. I think it was $80 million, if I'm correct. Let's see if it goes down here further. Okay, but I think it was $80 million they got originally. 85% of this mineral, antimony, was imported last year. But now they have a $245 million contract in September to supply to the National Defense Stockpile. But they are going to pull a lot of gold out of this mine. We'll talk about it more when we get back, folks. We'll talk some gold, record prices, silver as well. We're coming right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. And as I mentioned, so we're talking gold, we're talking silver, we're talking antimony, we're talking perpetual resources, and Mr. John Paulson of notable gold fame. Now, so check this out. I'll go over some of the basics that I want to touch on. First of all, they have received more than $80 million from the Pentagon to test the feasibility of refining its antimony to military standards. Okay? Now, check this out, though. They have a big ceremony, of course. Okay? Things are very ceremonial now. You got to have the ceremony. Okay? There's a picture of the ceremony with Paulson at a kickoff ceremony in Idaho. American Antimony is the banner there, okay? But industry experts and several military officials say they don't see the project as the best way to secure the U.S. antimony supply. The amount the company says it can recover. Now, for you gold investors out here, okay, if you have an exploration gold company and they tell you how much they can get out of the ground, okay, think about how long that's going to take. Think about if you're talking about every little bit out of the ground, right? Think about all these companies we know about that have vast resources in the ground and how long it takes them to get it out of the ground, okay? And if you ask the company, Perpetual Resources, how much antimony it can recover enough to supply what we need as a country for 2 years, and that's it. Yeah. The grade of the ore is substantially lower than deposits elsewhere. And the relatively low grade means it's going to cost more to refine that to meet military and commercial standards, which some people say is economically unsound. Here's the best part, though. 4.2 million ounces of gold is what Perpetua expects to mine over 15 years, worth $18 billion. And here we are giving that company money, $80 million. And listen, antimony is important. I get it. But I think many listeners and viewers, that we have here are smart enough to look through the path and realize that John Paulson just figured out a great way to be able to mine all this gold that he has and let the government help him pay for it. The gold is expected to account for as much as 95% of the project's revenue. Okay? I mean, like I said, I'm going to post this one in the den, man. Perpetua's received more than $80 million from the Pentagon so far. Now, it goes down in here further, right? What do we look at? They got $245 million somewhere down here. But here's the best part of it all for Mr. Paulson. The Stibnite Gold Project, which is where this is, okay, it would not be economic to just get the antimony out of the ground. We've got to get the gold out, right? And they're seeking to expand the old mine and develop 2 additional pits, an ore processor and a waste storage facility in what is now a national forest, primarily on U.S. government land. So Paulson wants to expand their pits onto national forest land. He wants to take all of his gold out of the ground and get help by the Department of Defense to pay for getting the antimony out of the ground that many experts say is probably pretty expensive to get out, and there's bigger deposits elsewhere. Under a 1872 mining law, still in effect, companies don't have to pay royalties to extract minerals from federal land. So all this public land here is being privatized for the company's profits. That's who you know, folks. Okay? Pay attention to this one. I read this one over the weekend. I said, man, oh man, what a move. And yes, there's people suing. Okay? And yeah, I'm sure it's going to get talked about more with it being government land, with it being a mining company, and with that mining company then drilling on that land and saying, well, we just want to take out the antimony, but it's not feasible, so we're going to have to take out the gold too. And if you just let us into the national forest, we'll build some pit mines and we'll take out the gold, and that will help us pay for the antimony that we so desperately need. Perpetua has denied all allegations pertaining to environmental damage. All right, I think the writing says it. I'll post this so you can read it for yourself. And yes, that's a very important mineral. Okay, we need it. You better believe we do. We needed it during World War II, and that's why this mine is the article kicks off with the fact that this line, bands of rust and gunmetal and ash and buttercream are a testament to the mine's crucial role in World War II. Yeah. But now, Mr. Paulson wants to pull $18 billion worth of gold out of it and expand his mines onto the national forest. Why not? The government will let you, right? And get paid to do it, right? The government's paying for the feasibility studies to expand his land onto government land and to mine gold from it. You almost wouldn't believe it, right? I think you would. I believe it. Pretty remarkable, nonetheless. And yeah, at these prices, there's a lot of projects that are going to make sense. You better believe it. He's a gold guy. He studied that one well. I'm sure he knows there's some big deposits where he wants to expand to. And he figured out that, guess what? We got a lot of gold. We got a little bit of antimony. And hey, let's make it like this is a big, Go America project. And then we'll drill for $20 billion in gold on government land. All right, I'm jumping around. Where do we go to next? Let's check out some of the heat map, the equities, and what's moving. So Apple. Yeah, Apple, Walmart, it's like the safest stocks out there. Pull back when you get a day like this. Apple off by 1.1%. Let's check it out. Yeah, we talked about it when it was up here. Put this channel on if you trade in Apple, folks. Apple's a great equity. But we are, to back it up even further than that, wherever you take this channel line, but somewhere around since 2020, those COVID lows to the highs. We've just been chopping around, and we're a little bit in the overbought part of this channel line. Apple off by 1.1. You jump over to Walmart, as I mentioned, same deal. Two of the safest stocks out there. You're seeing them both roll over today when, nobody's worried about anything, right? When the VIX is dropping to 14, nobody's worried about anything. And the last stocks they're buying are Walmart and Apple because those are the safest stocks out there. So when they're worried, they're buying Walmart and Apple, rightfully so. When they're not worried, who are they buying? All the speculative stocks. Oracle up by 3.3% today. Not Robinhood. They give it back a bit. Jump over to Palantir. They give it back as well. We look over to Tesla. Talk about volatility, man. Tesla hits an all-time high this morning. We're up by 1.5% right now. We jump to the banks. Well, that's a bad tick in the pre-market for JP Morgan. Distorts that chart. There you go. JP Morgan up by 1.7%. Bank of America, they all got bad ticks this morning, huh? Bank of America up by 1% right now. Citi up by 2.9%. My goodness, look at Citi. Whew. Look at this chart of the banks, man. Citi from $38 almost 2 years ago to $118. One more segment, folks. Don't go away. We're coming right back. Don't forget about Tiger Dollars. Front page of TFNN. Be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Open Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com and hit Watch Tiger TV.
Welcome back, folks, and we jump over to gold. 44.73. I mean, we're $4 off the highs right now. You might finish with a tick high. Gold making a run again. We jump over to gold, up by 2%. Silver, up by 2.05%. Platinum, yeah, platinum's the leader. Look at it. Talked about it this morning. It's still doing it. Up 5.7%, up $115. And remember, you got platinum out there. 23.08. Remarkable. And you know, jumping back to the 60 minutes, so Paramount, I'm an owner in Paramount Skydance, okay? And, you know, the story's not as much about them as I just continually want to make it about the due process of anyone that we arrest and do whatever with, right? So this segment was about, arresting people that you say are Venezuelan gang members, and not even, right? We're whatever it has to be, okay? And what I don't understand here, okay, is El Salvador. Yeah, and then shipping them to El Salvador. Everybody deserves due process. I was looking forward to seeing this. Now, they contacted the White House, the State Department for comment. Nobody commented, okay? Here's the most remarkable part about this. They're not citizens, okay? Now, the only argument against is that they're not citizens, so they don't have a right to defend themselves in a court of law. Folks, the president's own wife, the first lady, when they got married, she wasn't a citizen. Okay, George Bush was the president. Nobody would have ever supported Melania getting picked up, getting accused of being a terrorist, and getting dropped off in an El Salvador prison without any judge at all involved and just trusting the president. Whether they're a citizen or not, the president, the first lady, nobody ever would have supported that. Okay, so I don't understand how any of that makes sense. Everybody, the last thing we want is a king that gets to say who's guilty, who's not. That's not what America's about in any way. So hopefully they air that 60 Minutes eventually. They said they will, but not about 60 Minutes. It should be about just shipping people to third world prisons without any due process. We'll leave you with that, folks. Markets in the green. Don't forget about Tiger Dollars. We'll see you